Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So today's episode, as you guys and girls can see, I'm going to put this across the bottom here. We're going to be talking about the stocks continue to sell off. We're seeing another massive sell-off that's taking over the markets right now. Another 500 points on the Dow Jones. The NASDAQ leading the way as tech sell-off just goes crazy. Leave a minute to say tech has been seeing about a 20% correction so far. It's the tech bubble bursting. And where did the money go? Did it just evaporate? What happened? So in today's episode, we're going to talk about the stocks continuing to slide. And we're going to take a look at, are techs overvalued? Is it fear or is evaluation taking the centerfold on the top companies inside of the NASDAQ? So we're going to talk about what is causing that slide. Evaluation, are we overvaluated, undervaluated? So it's going to be a nice discussion episode, more so than a educational episode. Usually the episodes I usually do are very full, very educational. Tonight's show is going to be more informal. Not informal, but not informal as in informal, like in dress casual or whatnot. But it won't be as informational, deep dive and fishing trips like we usually do. So as you're coming in, tell me where you're from. Say hello. Don't be afraid. But we're going to talk about that, ladies and gentlemen. So let's see what we got going on here in the comments before we jump straight into it. We got the Super Slayton. He says the tech stocks are bursting. It's been a long trend of going up. Now it's time for recorrection. All right. Correction, ladies and gentlemen, when you drop 20% or more in an index. So you're talking about the NASDAQ all-time high was around 12,000, 13,000. And ladies and gentlemen, let's get into it so people that's tuning in know what I'm talking about. The stock market is controlled by three major indexes, which is the Dow Jones, the NASDAQ, and the S&P 500. The Dow Jones is pretty much comprised of 30 stocks versus the NASDAQ is comprised of 100 stocks. S&P 500 is comprised of 500 of the top companies. NASDAQ is usually your more heavily tech-held companies. So when we say the NASDAQ has seen a correction or the NASDAQ is doing this or doing that, I just wanted to make sure you guys and girls knew exactly what I was talking about. So the NASDAQ, yes, he's saying the NASDAQ is overvalued or whatnot, and that's what he think is causing that. Y'all give me 1 second here. So I'm going on my screen. But we're going to talk about that today. Let's take a look here. Where we at? Okay, the next person. How you doing, Miss Crenshaw? Do you think Uber is good long-term investment, Prince? Uber, wow, look at that smile there. She's very happy. She's like, ah. But anyway, how you say that, Miss Maria? I can't say her name, Miss Crenshaw. But anyway, ladies and gentlemen, what do I think Uber? Okay, I think Uber is a great. I think Uber's looking like Facebook did in 2013. I always said that. I still believe that. Uber currently is facing a very big issue right now with stocks. I mean, they're facing regulation, political risk. They have a very big political incident going on, meaning that the federal government is not the federal government, but the state government of California is forcing Uber to turn their drivers who are independent contractors to employees. If they do that, that will pretty much dismantle the Uber business model because the Uber business model, everybody is an independent contractor. And the government in California is saying, no, those people are workers, and if they are workers, you have to pay payroll tax. That means the state makes more money, but that collapses Uber's business model. What makes Uber so successful is that they don't own any cars, nor do they have any employees besides the people that work at the headquarters. Everybody work on their own. If they do that, that will hurt them, right? So that's the way I think about it. That's the way I look at it. So right now they have a very legal issue. How do I think they would pan out in the legal issue? I think they will win. I think Uber is around about a 20, $30 billion market cap company with that much money on the table. I think they will figure something out. Either either they're going to turn those contractors into workers, or they're going to turn those workers into or contractors into franchise owners. They're going to figure something, or they're just going to leave California altogether. But the downside is when you have a legal issue and California starts to say something, then that can start a chain of events to go to New York, Texas, Georgia, Colorado, wherever. It can go around the world, right? So that's one of the bad things. So they have a very big issue. The jury is out on Uber. That's their latest issue they have. Hope that helps you. CP said, "Tell us what you're looking at buying." There's a couple things on my wish list. Which wish list. So, as ladies and gentlemen, I always tell people, always be constructing your wish list. Always have your wish going on. What is the wish list? I just did the video on Monday where we did a deep dive into stocks, right? We found out how to find the next hot thing, what would be the next hot thing, all those great things. Once you discover what those things are, I put them on my wish list. When they're on my wish list, times like this, when the market is selling off and everybody's getting rid of everything, it's the perfect time for me to start executing that wish list. So right now, there's a couple ones that I'm looking at. I can't even think of the symbol name on top of my head, but I may give away one or two of them or whatnot, right? That I'm looking at. What's going on here? We got here Wayne. What's going on, Wayne? He says, "What's new, Prince?" All right, yeah, this is going to be a more discussion episode. He says, "Hey, Prince, what's going on, Tony?" He said, "Going on sale." Yes, it's a very big sale going on. He said, "What's new, Prince?" And he's from Chesterfield, Virginia. And ladies and gentlemen, if you haven't done so already, make sure you go ahead, hit the subscribe button, hit the bell icon, hit that like, comment, and share button. All right. Chesterfield. So Tony said he's buying more Apple. Yes, I did. That is one thing I did. I did buy some more Apple in some portfolios. So I don't look at it that way. I'm sorry about that, Miss Crenshaw. She said, get my name right. She said, pronounce it is Myjahnee. Myjahnee. She said, thanks, Prince. Anytime, anytime. Tony says, back to $2 trillion market cap on Apple. Okay. He said, what do you think about Rocket? He's talking about Rocket Mortgage. We may can look into that one. I don't know off the top of my head about Rocket Mortgage, but they had a pretty nice run, right? So, ladies and gentlemen, I always want you to keep in mind companies that profit from volatility from slides. So, when you see increased volatility, when you see these massive slides in the market only can slide when the economy, not the economy, but when people are selling stocks. When people are selling stocks drastically, a lot of selling going on, a lot of people buying put options, a lot of people buying call options, things like that or whatnot. But, ladies and gentlemen, who profits from that? Three companies. I always said this. You should know this by now. TD Ameritrade, E-Trade, Goldman Sachs, they profit when we see major volatility in the market. When people jump on and start to buy and sell, every time you buy and sell a contract or whatnot, when you buy options and you become speculative and some people sell, some people open up accounts, things like that, that is more money for broker houses. Brokers are your E-Trade, TD Ameritrade, Scott Trade, and things like that or whatever, right? So you got to be very, very mindful of that. Make sure I turn my light off this way here. All right. So be very mindful of when you are seeing who's profiting from the slides. Now I got to ask this question. When we see stocks slide like this takes me back to history. When you study the history of the market, you look at the history of the market from 1901. When you see massive fear in the market, usually right after the assassination of a president, I think 1907, a president got assassinated. You saw a crash in the market. You saw the markets crash in 1962 after President Kennedy was assassinated. You saw massive fear hit the market in 1929, which is known as Black Tuesday, right? Then you have Black Monday of 1987. And then you had the dot-com bomb that exploded in March, that hit its top and burst in March 20th of 2020. Now you got to ask yourself, when you look at all these major bubbles, and what makes so interesting about this tech bubble is exactly about 19 years ago, 20 years ago, you saw this exact same thing happen in the tech world. In the tech world, when the internet started to explode, the internet exploded in the 90s. When I mean exploded in the 90s, more people started to get it to their houses. So when people started to get internet into their houses, everything that had .com on it just grew. Amazon was one of them. Companies were going up. The NASDAQ had gone up 400%. I think it was over a 5-year span. So you've seen these massive growth in the tech industry. And then sometimes we get to where we speculate and we just think that you can't miss. Just get a .com company. The internet is taking over the world. So guess what? Like every other bubble, it bursts. And the bubbles in the stock market burst way faster than in business or in real estate. And the reason why, because I just said this, and just said this Monday, was that stocks is the only asset class where people can buy and sell within seconds. Right now, I own land, and I have gotten letters in the mail that ask me to purchase my land. Even if I wanted to sell my land, it would probably take me 2 weeks to sell my land. Take my house. If I wanted to sell my house, it would probably take me a few months to sell my house. But if I want to get rid of all my Apple stock, it only take me tomorrow morning, and it probably take me less than 30 seconds, right? So, ladies and gentlemen, you got to be very mindful that when things start to crumble in the stock market, you're going to see a lot of volatility. That's one of the disadvantages. You got to be able to stomach that ride. You know, when you're on that roller coaster and it starts to take that deep, deep dive, and it kind of hits you in your stomach, and you're kind of like, oh, that's what happens when you see market volatility. So now I got to ask myself, is this ran by fear or evaluations? And the dot-com bomb, a lot of companies just was over-evaluated. If you put .com behind it, it just over-evaluated. Prince, what is your strategy to see if the NASDAQ is over-evaluated? First, I look at the weight of the NASDAQ. The NASDAQ tracks 100 companies, mostly technology companies. What are the biggest companies in the NASDAQ? I ask you guys and girls that question. What are the biggest companies in the NASDAQ? Comment, what do you think are the biggest companies in the NASDAQ? I gotta give me a new charger too. What are the biggest companies in the NASDAQ? So y'all give me 1 second. Y'all give me 1 second. I gotta go grab my new charger. So I gotta charge this stuff up. I gotta charge something up real quick. So you gotta ask yourself, what are the biggest companies in the NASDAQ? Let's name the top three. Let's see, can you come up with the top three companies in the NASDAQ? All right. Y'all give me 1 second here. All right. I gotta grab my charger to make sure my battery don't go down. 1 second. All right, ladies and gentlemen, we are back. Sorry about that. Let me see what y'all are saying in the comments. 1 second here. All right, let me see what y'all are saying in the comments here. All right. It's my guy Max B. He said Prince Tesla is looking good. Tesla's going through a hard time. He said, what are some good inverse stocks? One I can think off the top of my head is SPXS. That's on the, you got to be careful with inverse, right? One of the big inverses right now is SPXS. That's against the S&P 500. You got to be careful. It's my guy, Duncan. What's going on, Dunk? Jacksonville, Florida here. I'm looking at, he said, I'm not looking at my account today. Smart. Down days, when you look at your account, you have a tendency to make more emotional decisions than you would if you didn't look at your account. So let's see what y'all are saying here. Wayne's saying, what about the battery day on yesterday? That was a big day. We can kind of get into that if we got time. That was a battery day, big day for Tesla. Apple. Casey Peterson says Apple and Microsoft. 1 second, let me fix mine. Something's going on with my lighting here. Give me 1 second, my screen. I got my bad shirt today. There we go. All right. You said Amazon, Google. Somebody said Google. Right? He says Trevor Militant. I don't know who that is in here. But anyway, what I have down here, ladies and gentlemen, is Apple, Microsoft, and Amazon. Apple, Microsoft, and Amazon being some of the largest companies you see inside of the NASDAQ. Now, when you're looking at fear and you're looking at fear and you're doing evaluations on the NASDAQ, 30% of the NASDAQ is controlled by 3 big major companies. And those 3 big major companies are Apple, Microsoft, Amazon, and Google. Nobody said Amazon. Why everybody looked over Amazon? How you going to do Amazon like that? But you got Apple, Microsoft, and Amazon. So now when I look at this, when you look at 51% of the stocks, you got Apple. The other, I would say about 30% is ran by Apple, Microsoft, and Amazon. I said that for about the 15th time. But ladies and gentlemen, the reason why you're seeing that, reason why I bring up those companies is I look at the value of those companies. And if those companies are overvalued, then I can consider that the NASDAQ could be overvalued. So I got to ask you guys and girls, Apple is the largest company in the world at $2 trillion market cap. Not so much as of late, it's probably about 1.5 trillion. So you look at Apple, right? You look at Microsoft and you look at Amazon. Do you think Apple, Microsoft, and Amazon are overvalued? Is Apple, Microsoft, or Amazon overvalued? Look at that. Miss Kathy was the only one to say Amazon. Everybody said Apple. Some people said Google. I saw somebody said Microsoft in here. But everybody skipped over Amazon, the largest e-com in the world, the one that's dominating. Amazon is cookie cutter for a time like this. For a time like this, when everybody's at home and shopping, and the taste for the way people shop, they don't shop the same no more. People don't go to the malls like they used to. You know, I don't know when the last time I've been to a mall to go shopping. It's very suddenly, right? Oh, the CEO of Nokia. Oh, I forgot what I saw. What happened to Nokia? No, I know. I can't even say their name. Nicola, right? So everybody forgot about Amazon, right? So as we look at this, ladies and gentlemen, you got to ask yourself this question: is Apple, Microsoft, Amazon overvalued? Apple is about $100. Was trading for $400 before the market split. Microsoft is under $200. Amazon is right at $3,000, right below $3,000. Do you believe these companies are overvalued? These are the biggest sellers. When Apple falls, so does the NASDAQ. When Microsoft falls, so does the NASDAQ. Microsoft doesn't fall too much, you know, because of just their beta, right? Now, when you look at Amazon, do you believe Amazon is overvalued? Now, let me ask yourself this question. What determines if a company is overvalued? What determines if a company is overvalued? Now, you got to ask yourself, when you look back over history and you see large market falls, when you look back over history, let me tell you a mistake that a lot of people make. A lot of people see stocks falling, and just like somebody here asked, they said, Prince, how can I bet against the market, which is a inverse ETF? When somebody asks the inverse ETF, they're looking to bet against the market. And as soon as you get that inverse ETF, guess what happens? The bull comes back in and takes right off because you sell all of what happens in your portfolio. You don't have enough cash there. So you like, you know what? I was up on Uber. I'm still a little bit up on Apple. I'm still a little bit up on Google. So let me sell those companies so I can buy some bet against the market. Now you sell all your good companies to bet against the market. And what does the market do? It turns around and takes off on you and goes up. Now you're burned out two ways. Now you cut some losses. You cut some good companies, bet against the market for the short term, because we know the market over the long term will go up. Now, I said this again. Back in March, when the market was falling, everybody said, oh, Prince, man, I felt like I missed it. You know, I missed it, man. I missed my, man, I should have bought all of the Uber, man. I should have bought all that Nike, man. I really should have bought all the Amazon. Come and think about it. Man, I should have really bought Apple, man. I missed the boat on Tesla. Now, when these same exact companies are now sliding off, everybody's saying, oh, end of the world. So what is overvalued? What is overvalued, right? When you say, hey, the market is overvalued, the NASDAQ is overvalued, Apple is overvalued, what does that consist of? What are you basing that off of, right? Wayne said no. Super says yes, Apple and Tesla are very overvalued at this time frame. I can maybe give Tesla. Tesla got a little hype, you know. Made it, Freddie B. Freddie B, that's my guy, Freddie B. Y'all, Freddie B, go ahead and put your investor show cup up. Freddie B, you should know this answer. What is overvalued? How do you know if a company is overvalued? Is it the stock price? What are you basing that on? Now, ladies and gentlemen, I'm going to take you from a financial guy or a financial girl and turn you to think like a financial professional. There's a big difference between a financial guy, financial girl, and a financial professional. A financial guy, girl, they'll open up their phone. Man, look at this, man. I don't like Apple. Yeah, Apple overvalued. Financial professional has factual data, historical trends, and current trends to back up their analysis. What do you have to say? He said Eastside 29 says inflation. Could be inflation. Bingo, ding, 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 ding. Hey, how you doing, Ms. Ruby? Glad to see you back. Hold on, Ms. Ruby, I can't remember the city and state you're from, but I know you have a bunch of Tesla and Apple, I think. Hold on to it. There you go, Casey. Casey got it. PE ratio, earnings. He said PE ratio or earnings. Ladies and gentlemen, what is the PE ratio? Price to earnings. So PE ratio is taking the earnings and connecting it to the price. Ladies and gentlemen, it boils down to the earnings. Does it make money? Are you making money? It goes back down to the fundamentals. Basketball is great to watch. You can see people do dunks. Some people go behind the back. Some people can do a spin move over the shoulder, do a around the world dunk windmill. But it comes down to the basics on who wins. Can you put the ball in the basket? Is it a three-pointer? Is it a layup? Is it a jump shot? Is it a mid-range, short-range, dunk? It comes down to the basics. If you can't dribble the ball, nothing else matters. So, ladies and gentlemen, stocks will always resort to their fundamentals. My latest book that I'm reading, shouts out to Mr. Gennaro. You know, for y'all know I had my 36th birthday over the weekend. And on my porch, he sent me the newest book that I'm reading. I'm reading 2 books right now, but the newest one I added, Mr. Jesse Liverpool, who was the greatest stock trader of all time. He pretty much was Warren Buffett before Warren Buffett, essentially. What I'm reading into the book so far, great guy. He was known as the Green Bear. He had a lot of money, and he always bet against the market. And I wanted to hear his synopsis of why did he short stocks? Why did he short stocks and whatnot? And he always talked about looking for overvalued stocks. Now, he got a lot wrong, but of course, he got more right than he had wrong. But the question was, why did he do this? I knew him. She said, I'm from Memphis, Tennessee, and she's holding on. You got no choice but to hold on now because she has a bunch of Tesla and Apple. I know that portfolio. Don't even log in and see it unless you're buying some more. Stocks become less riskier the longer you hold them. The shorter you hold them, the more risky they are. The person who buys a call option that expires Friday, next week, next month, very risky. But the person who holds the stock for a couple months, a year, 2 months, 3 years, they become less and less riskier. Ask yourself, ladies and gentlemen, does Apple, Microsoft, Amazon have earnings to justify their price? That's it. Simple. Like I told y'all all the time, I'm not that smart of a guy, but I'm smart enough to know what I'm doing. Does Apple, Microsoft, or Amazon have earnings to back up the price of the stock? If they don't have earnings to justify their price, that is what I consider overvalued. If you're an unprofitable company, you haven't made a dime, money is just going down and down and down and down in your company, but the value and the stock price continues to climb, that's when I can look at you being overvalued. Undervalued, it's the exact opposite. Undervalued, when the stock price is extremely low, but it's very valuable, and it's all based off the fundamentals. What is considered overvalued? When you don't have earnings to justify the price. Does the earnings justify the price? On this show, ladies and gentlemen, what you always see me do about every episode, I'm pulling up the financial reports. I'm going through the income statement, I'm going through the balance sheets, and I'm going through the income statements, the balance sheet, and the cash flow statements. I can sleep at night with everything I have in my portfolio. Only one I can't sleep with right now is Uber. I don't know if you're going to make it Uber. But I knew that going into Uber. And that's fine if you know that. But ladies and gentlemen, you must understand, does Amazon, Microsoft, and Apple have earnings to justify their price? What do you think? Drop a comment. Say yes or no. Now, ask yourself, when is Apple, Microsoft, and Amazon next earning report? The way you shut up the critics continue to get better. On my path, ladies and gentlemen, I've had plenty of people still to this day and back in the day that criticized me. When I came out 7 years ago and said, yeah, I'm going to just do a YouTube channel. Finances was not that hot of a topic on YouTube back then. Podcasting and making tutorials wasn't cool. Writing children's books on financial literacy wasn't that cool back then. When I wanted to do all that, I was looked at like I had 3 horns. You know what shut up those people? Success. What is success of a stock? What is the success of a stock? The earnings. What is the success of a company? The earnings. Ladies and gentlemen, what y'all saying? He said yes, he believed they have the earnings. So ladies and gentlemen, if you believe Apple, Microsoft, and Amazon, which comprises of 30% of the NASDAQ, if you believe they have the earnings to justify the price of the stock, they know they're not overvalued. When I watched Mr. Jesse Liverpool, when I was reading his book, fascinating book so far, I'm going through his book, I'm learning about the man, I'm seeing his thought process, and he's a big bear. He looks for people to get so excited about something, they overbuy it, it gets overvalued, that's when he looks to bet against it. That's how he made his millions. This is in the 20s. This was in the 20s. He got extremely rich off of the stock market crash, off of Black Tuesday. That was the worst stock market crash of all time, of 1929. That's what created so many things like the Security Act in 1934, the SEC, things like that or whatnot. Mr. Duncan, you're right. Apple is due on October 28th. So is Amazon is due on October 28th. These companies have to return in their earnings report. They're going to turn their quarterly earnings report are due the end of next month. That's when you're going to put the critics to shame. You can talk all you want. You can say what you want to say. The numbers don't lie. People lie. Numbers don't. In business, numbers don't lie. I can sit here and tell you guys about how great my show is, how great stuff I put out on the internet and the web. But I don't have to do that. If somebody reached out to me and said, Prince, man, you are an idiot. Your show is horrible. I hate it. I can pull up the numbers. I said, well, according to my podcast numbers, this is how many listeners I have. This is how much watch time I have. This is how many subscribers I have. This is how many people are tuning in right now. I can't back off of numbers. So October 28th is the day of the earnings call. Earnings. Are earnings growing? Is Amazon earnings growing? What is the growth potential of Amazon's earnings? What is the growth potential of Microsoft? What is the growth potential of Apple? Some people argue and say, man, who's buying iPhones like that and who's buying these products? But I don't want to hear none of that. I'm waiting for the earnings. When those earnings come out and the earnings look good and the stock continues to drop, that's when I know you're overvalued. When the earnings come out, and we're going to read them here on this show, and the earnings justify, earnings are growing. Look at Nike. Google Nike's earnings. I'm going to Google Nike's earnings. We're going to look at Nike's earnings, ladies and gentlemen. And this is a very good prelude into what's going to happen. I don't want to hear nothing else nobody has to say. Show me the numbers. Everything else emotional. You got to take emotional out of it. We're going to look at Nike's earnings. How do you think Nike did on this earnings that it reported today? This is why earnings are important, ladies and gentlemen. We're going to take a quick look. Here we go. Google. We're going to look at Nike investor relations. All right. We're going to go to Nike. Right now, ladies and gentlemen, we're going to pull up Nike's earnings. Where are they at? Don't try to hide from me either. I know y'all came out yesterday. Where are those financial reports? Okay, investors. Quarterly earnings. Let's take a look at their quarterly earnings. See if they got them up on their site already. That's Q1 2021. That's kind of weird. Let's take a look. Here we go here. Okay, here we go. This is what you call the earnings, ladies and gentlemen. Women lie, men lie, Prince will lie. This is why I love finances. I took a liking in the finances because, ladies and gentlemen, I don't have to sit here and try to, I don't know, just 1 second. Y'all give me 1 second. I'm trying to, for the people that's catching this live, I'm pulling up the screen here. Here we go. I'm sorry about that. Here we go. Ladies and gentlemen, what you're looking at here, this is Nike's quarterly earnings. When did it come out? Wow, look at that. September 22nd. Today, we reported our fiscal 2020 results. First quarter report revenues were $10.6 billion, down 1% on a reported basis at flat period year-to-currency ratio. Nike direct sales, $3.7 billion, up 12% on a reported basis and up 13% on a currency neutral basis. So what they're saying is that when they're saying currency neutral basis, they're talking about, hey, we sell shoes in China, we sell shoes in Mexico, we share shoes around the globe, right? Of course, everybody want to give me a call. One second. Hey, let me give you a call when I get done with this, all right? I said, let me give you a call right back, all right? All right. So, anyway, ladies and gentlemen, getting back to it. That was so unprofessional, I don't know, but y'all are like family that tune in to here. So, first quarter report. So, here we go. So, if you sell shoes in Mexico and you make money in Mexico, you make pesos. That's the currency over there, right? You make pesos. When you convert those pesos into dollar, some people lose money versus make money depending on the power of the dollar. So currency exchange can cause to make you lose some money. So here we go here, right? So their sales are up 12 to 13%. Nike brand digital sales increased 82% or 83% on a currency neutral basis, with double-digit increases across North America, Greater China, APLA, and triple growth in the EMA. I can't think of EMA. EMEA. If you know what that is, what part they're referring to, please let me know. You know, earnings per quarter up 10%. They went up 95%. Inventory rose 15% versus it was 9%. So look at this, blowout. Our quarterly results this quarter continue to demonstrate Nike's fully competitive advantage as we strengthen our position in the midst of, I lost my spot, the CEO of Nike. In this dynamic environment, no one can match our pace of launching innovative products and keep branding. Our quarterly revenue performance was impacted by a strong Nike brand growth of 82%. Nike grew by 82% in the middle of a worldwide pandemic? What does that mean, ladies and gentlemen? So I'm not going to go through all the earnings, but I wanted to show you how earnings are more important. Nike stock went up, I think, about 10% today. Sue says, what do you think will happen to the NASDAQ on the 29th during quarterly earnings? There are so many companies. You have 4 companies, I think 4 major tech companies that are coming out. Even if one of them missed, the other 3 would carry them. Ask yourself, look up, Super, what happened on the last quarterly earnings that came out? They came out at the same time. Google was the only one that was kind of slow. Google was a little down, but Apple and Microsoft, I think it was, carried them across the line. So right now, what's carrying the market right now is the NASDAQ, tech companies. And if I can make you, I can break you. He says Nike's been on fire. Nike's been on fire. Why are you saying Nike is on fire? Because of Nike's earnings. Ladies and gentlemen, it goes back to, you want to know, people saying, oh, stocks are stocks crashing. They only crash for 2 reasons. Fear over value. Fear over value. Right now, do you believe Apple, Microsoft, and Amazon, is it controlled by fear selling, or do you think they're overvalued? Okay, thank you. You're the UK, EMEA. I learned something new today. EMA is the UK. So that was Nike was talking about how the earnings just grew all in North America in the midst of a pandemic. Nike grew 82%. They had the earnings to justify the price of the stock. That's how I know when something is overvalued or undervalued, by looking at the numbers. Now, ladies and gentlemen, right there, we just read the earnings. I didn't even go down and look at the numbers because that's for another episode. So when October 28th comes and Apple put out their numbers, Amazon got to put out those numbers. Microsoft is going to probably put out their numbers a week before them or right around that same time. When these tech companies got to put out their numbers, are their numbers going to justify the price? If the numbers are great and justify the price, thank you very much. Europe, Middle East, and Africa. Thank you. Appreciate that. I learned something new. Some companies just write in there Europe, Middle East, and Africa. Some people write EMEA. Appreciate that. Thank you. That's Miss Ryder or Mr. I don't know. You know, I don't want somebody to say, hey, you said that's I'm a male, female, or whatever. But anyway, ladies and gentlemen, earnings. We looked at Nike's earnings. They have the earnings to justify their price. That's why they're now over $100. Now, every market crash, I told you, results to the bears taking advantage of overvalued stocks. And the only way to know if you have something that's overvalued is that it's not producing that's compared to its relative price. So, ladies and gentlemen, when you say something is overpriced, when you're a financial professional, you pull up the earnings statements. You just don't look at the PE ratio. You look up the earnings statements. You look at how much a company's cost, how much it was costing. Is the price of this company overvalued or undervalued? If the companies are not overvalued, why is everybody selling? The next thing is it could be a correction or fear. Massive sell-offs. All right. Okay, ladies and gentlemen, that's going to conclude today's episode. Like I said, it's going to be a pretty quick episode for tonight. I got to get running. I got a lot of phone calls to make, and it's pretty late. So I got to touch in with some people before I get out of here. And that's what we're going to do. So today, ladies and gentlemen, we went over why stocks are sliding. We talked about companies that profit from the sliding again. We talked about fear versus overvaluation. What is pushing stocks down? Is it fear, or is it that stocks are the bubble bursting? And the only way the bubble bursts is if you have something that's overvalued. Now we looked at earnings. We looked at Nike. Nike earnings came out today as an example of using earnings to justify price. It doesn't matter, ladies and gentlemen. I don't care what the stock market say. I don't care what Prince Dykes say. I don't care what I think. Look at the numbers. If the numbers justify the price, no, it is not overvalued. All right. Ladies and gentlemen, boys and girls and children of all ages, I thank y'all for tuning in tonight. Until the next video, podcast, cartoon, or whatever else crazy you can do around the globe, make sure you grab your Investor Show Cup mug. Make sure you grab the book series, the entire series of Wesley Learns, available across the globe. Until the next video, podcast, cartoon, or whatever else crazy you can do around the globe, peace, be safe, I'm out, and thank you.